Fears over Omicron's possible impact on global economic recovery dragged the FBM-KLCI to its lowest in 13 months on Monday. The FBM-KLCI fell 18.29 points or 1.22% to 1,483.45 compared with 1,501.74 on December 2nd. Top Glove Corp led the downtrend among the heavyweights ahead of its first quarter FY22 results that will be announced Friday, closing 8.5% or 24 cents lower to RM2.57 with over 35 million shares traded. On the broader market, losers outpaced gainers 789 to 242, while 369 counters were unchanged. Turnover decreased to 3.66 billion units valued at 2.57 billion from last Thursday's 3.73 billion units valued at 3.06 billion ringgit. The new COVID-19 variant has been detected in 38 countries according to the World Health Organization. Following this, Rakuten Trade VP of Equity Research Tong Pak Leng told Bernama that key regional markets closed broadly lower as worries about the Omicron variant continue, while investors are cautious ahead of the release of China's economic data scheduled this week. Also on the dock, the US Federal Reserve's monetary policy stance. Tong says that sentiment for the local bourse will remain cautious and expects the benchmark index to trend around the 1,480 to 1,490 range for the week. Finance Minister Tunku Datuk Sri Zafrul Abdul Aziz says Malaysia is on track to achieving GDP growth of 3 to 4% this year, despite the emergence of the Omicron variant. He was responding to a question posed to him during an interview with CNBC that aired today about whether the variant would add a further downside risk to the Malaysian economy. The minister stressed that the government is committed to safeguarding the people and ensuring business continuity, given their importance to the economy. He says this is reflected by the 8 economic stimulus packages worth 530 billion launched over the past 2 years, designed to bubble wrap the economy from the pandemic. Commenting on the global concerns over inflation, Zafrul says Malaysia is not spared in experiencing higher inflation rate following supply chain disruptions in light of the COVID-19 pandemic, adding that it would take time for the global supply chain to recover. He says that Malaysia has been lucky in terms of manufacturing, noting its integral role in the supply chain, adding that it stands to benefit from economies opening up. Mah Sing Group's healthcare business unit, Mah Sing Healthcare, has received approval from the US Food and Drug Administration to market nitrile examination gloves stateside. The group said it received 510K clearance from the FDA on December 4th, and it believes the global demand for gloves will continue to rise until 2023. The company says that with the 510K clearance, the recent issuance of a medical device license from Health Canada, and pending the completion of the European Union Medical Devices Regulation Certificate, MSH will be able to export medical-grade gloves to a wider range of markets. Mah Sing says that the gaining of these approvals is timely as it will complete commissioning all 12 production lines by December, which will result in a maximum production capacity of 3.68 billion pieces per annum. The group adds that it is also planning to add autoboxing in the near future by collaborating with packing automation specialists. The group says that demand for gloves is expected to remain steady due to structural increase in demand, fears of reinfection, increased health awareness and hygiene compliance requirements for both the healthcare and non-healthcare sectors. Labour rights activist Andy Hall says he has no intention of launching a further public campaign against companies that are open to constructive dialogues on migrant worker rights. He says that it is important to ensure migrant workers' livelihoods are sustained while not compromising their welfare. Hall had issued the statement together with electronics manufacturing services provider VS Industry on Monday. This came after VS Industry reached out to Hall following references made to the company during a recent investor briefing on the topic of migrant workers' welfare in Malaysia. Hall clarifies that while he maintains that there is a need to conduct further due diligence with regard to the situation of migrant workers in Malaysia, he says his recent comments were not meant as direct reference to indicate irremediable migrant worker issues at VS Industry. In response, VS Industry says it is serious in its efforts to safeguard the legitimate rights and interests of all the group's employees, including migrant workers. VS Industry MDs Dato S.Y. Gan said that the company is in compliance with all government regulations with regard to its migrant workers, having passed checks by the Responsible Business Alliance and its key customers. Even so, Gan says that it appreciates Hall's concerns and stresses that it is open to working with external parties, including civil society, who can add value and further strengthen its ESG initiatives. T7 Global has secured 3 letters of appointment and awards worth a combined value of 300 million under its energy division for the operations and maintenance segment and specialist products segment. In a boss filing, T7 Global says the first contract was awarded by Petronas and will span 5 years from July 29, 2021 to July 28, 2026. The group also won an award from Charigali Hess Operating Co. for the provision of topside construction and maintenance services for its gas facilities located in Block A18, located roughly 150 kilometers northeast of Kota Baru. This contract is for 3 years, starting from January 15, 2022 to January 15, 2025, with an option to extend for another 2 years. The third contract was from Repsol Oil and Gas Malaysia for the provision of sales gas metering upgrade for Bunga Raya A. T7 Global says these awards are expected to contribute positively towards the group's earnings and net assets for the next 5 years. Chairman Datuk Sri Dr. Nik Norzultani Hasantani said in a statement that with these contracts, T7 Global's order book has swollen to 2.3 billion and its energy division will be expanding over the next couple of years executing these projects.